What's good? What's good? It's Sir Willoughby. Welcome back to the Stock Hustler Network. You're tuning in to the Hustle House, and we're just gonna go ahead and get right into it. Today we need to talk about a critical level on the SPY 500, on the S&P 500, and the NASDAQ and the Dow. Um, why I think a deeper correction could be right around the corner. This is not financial advice, just my opinion and analysis. So do your own research and due diligence. This is not no advice for you to buy, hold, or sell any asset. Based on me for educational purposes only. So let's go ahead and get right into it. So right now I got a few notes I'm gonna read off of. Right now, what I'm seeing, we're broad-based selling across the major U.S. indices. The S&P 500, tracked by the SPY ETF, has pulled back from recent highs. The NASDAQ is under even more pressure. We also got tech and growth names leading the downside, and the Dow also has given back gains, giving back a chunk of gains at that, from the recent highs. So this is not just one sector. This is an market-wide cooling risk appetite from what that I see in my analysis and my reports and deep research I've been doing. So we're gonna dive head and right into it. I'm gonna pull the charts up and we're gonna talk about the SPY real quick because these levels are real crucial. I was looking at these the other night, and what I came up with. And Wall Street said it right after the bell closed. They see it also. So we're gonna look at the SPY. The SPY is basically tracked the S&P 500. It's not. This is not the indice, but I use this indice, and a lot of more analysts do use this indice to track the S&P because it's all around ETF. So as we come in real quick, we see that Liberation Day sell-off. We also see that we got two bounces off of the 200, off of a price point and off of the 200 on the SPY. So we're gonna talk about it real quick. On the daily time frame, this is the daily chart we're looking at. The SPY is almost breaking below the 200 EMA. The 200 EMA is a big line in the sand for institutional and long-term traders when price comes into that level. When price comes into that level, you often see one or two things: a strong dip buying off of that zone, or you're gonna see a sharp pickup in the selling, and it finally cracks right below the 200, and we'll fall back down to this psychological support level that you see I got marked up on the chart in the white line around 16, 15, and 620 range. That's if it breaks below the 200 EMA. Now, if you zoom out, I don't have the chart right here, but if you zoom out on your weekly chart, now zoom out on the weekly chart and you will see the time frame. The SPY is also testing the 50 EMA, and this is a crucial level on the weekly as you look in the longer time frame. So you also have confluence to support the 200 EMA on the daily, and you got the 50 EMA on the weekly sitting at the same general area. When multiple time frames line up like that, it becomes a major decision point if buyers defend this zone or if long-term uptrends can stay intact. If they fail, it opens up the door for deeper and more lower levels. So that's what I'm seeing for the SPY right here. But so we're gonna call these levels out. 650, 651 range. That's a price point that we need to pay attention to. If it holds this level, that means the buyers want this thing to continue to stay in this range and they want it to go up. But if it breaks below the 651, 650, and if it breaks and close, get a day counter or a weekly counter up under the 200 EMA, or the weekly counter up under the 50 EMA, I see more downside in the market overall. So let's go match these things up, and let me show you why that's so important. And all the indices are matching up just like this. Let's check the NASDAQ out. So we check the NASDAQ. So when we check the NASDAQ and the Dow is confirming the move downward. The NASDAQ is showing a very similar picture. If you look at the same chart, this is a day chart on the NASDAQ, and it has the same similar movement. This is the actual NASDAQ whole indice. So you got the Liberation Day sell-off, and you also got up here two price points where it touched at, and it's also testing the 200 EMA. So this is critical in my point of view. From what I'm saying, Iran war is fueling all of this. The oil trade is ramping up right now. The NASDAQ is showing similar picture. After a strong run, it's pulled back into key moving averages and is already behaving like it's in the correction mode, especially in the high beta tech names. When the NASDAQ is losing momentum and it can bounce cleanly off these EMAs, it tells us risk appetite is fading. The Dow is also off its highs, and it's rolling over the rest of the to the rest of the market. So as we look at the Dow, we got the Dow off its highs. Let me hide that. Okay, there we go. We got the Dow right here. So we're gonna use the ETF Dow Jones Industrial Average ETF, and this kind of measures the whole Dow Jones market. Similar chart as the Nasdaq, similar chart as the S&P 500. Liberation Day sell off. Boom, get the rebound back up to the top. Same time, 5-month low. We got sell off in November. You know, Trump news, all that stuff was going on at that time. Sell back up, but now we're testing the 200 EMA from recent sell-offs of this year, and this is critical for all levels. So the Dow is also off its highs and rolling over the rest of the market. When you have the S&P, the Nasdaq, and the Dow all weakening together, that's usually a signal that this isn't just noise. This is a real shift in the market tone. So what could this mean next for us? So what could this mean next? So we're gonna take a quick look at the heat map from Friday. I'm recording this on Saturday. So if we look at the heat map from Friday, man, red everywhere. I'm talking about, oh my God. If you're a new investor, listen, man, stay in the game. I learned how to invest in 2022. I started small. I just wanted to learn the market, the basics, and I eventually grew to love the game. Stay in it, man. I got in the market in 2022 when the Ukraine-Russian war kicked off, and it was a bad market. That was the last bear market, and I'm seeing similar signs. So this is why I'm bringing you this video, family, because I'm seeing similar signs as that I seen in 2022 when war struck and oil had reached these prices and markets sell off and hit these levels like I'm seeing now. So please just be prepared. It's all this message, not to scare you. It's to make you sure you're prepared to be ready to reposition so you can catch the slingshot back up when the market turns around, because it always turning around, because the market is a forward going, looking for a market. So keep that in mind. So what could this mean next? So what does all of this mean? For me, the spot zone right around the 200 EMA on the daily and the 50 EMA on the weekly is the level to watch. If we hold and bounce, this could end up being a healthy pullback, a great healthy pullback, and buying the dip was very much worth it. Within an ongoing bull trend, you expected buyers to step in, shorts to cover, and maybe we get ground higher again. That's a maybe. But the SPY loses the area convincingly, especially on rise in volume. I think we could see more traditional correction unfold across the S&P, the NASDAQ, and the Dow. When these long-term EMA levels start to break, correlation usually spike, volatility jumps, and you can get faster, cleaner downside moves. And that's why I kind of, I never get married to no direction. If you're a NexGen traders, I always teach never get married to not one direction. We make money when the market is going up, and we make money when the market is going down. You get what I'm saying? So always stay focused on where the market is going and trade with the trend. Trend is your friend. How I'm approaching it. This is how I'm looking at it and how I'm gonna attack next week. Personally, I'm treating this as an elevated risk environment. I am watching how price behavior behaves these EMAs. So I want to see next week coming up Monday, Tuesday, on into Wednesday. Are we going to get like a bounce from the day counters? My day counters stay above that 651 range, and my day counters stay above that 200 EMA, that 50 EMA on the weekly. Then we kind of get some protection saying, hey, this could just be a good, strong support level. Could be a good, strong support level. So, so I'm focusing more on risk management, and then more than just trying to nail the dip. I have been buying a little bit, but I haven't been heavily buying. I've just been repositioning myself in some plays. Levels matter, but how the price reacts to those levels matter even more. I just want to let you know, thank you for tuning in. Please like and subscribe. That's my breakdown on the SPY, NASDAQ, and the Dow, and why I think a bigger correction could be just setting up to come in, and so we can reposition ourselves and actually get a slingshot. The market's been at all-time highs going on 2 years, so I anticipated a correction, and I think I'm seeing the signs for that. Could be setting up. Let me know in the comments, do you think the support holds? Do you think those 200 EMA levels holds on the daily? Do you think the 50 MA gonna hold on the weekly? Let me know what you guys think in the comments. Please, please, please drop your answers. Or do we see more real flesh coming from here? Do you see more downside? If you don't see it gonna hold, let me know. Let me know, hey, bear market is coming. The bear market coming, we're gonna teach you, we're gonna learn how to reposition ourselves and still make money while everybody else probably panicking. If you found this helpful, drop a like, subscribe, hit the notification bell so you don't miss out on the updates. Thank you for tuning in. Again, my name is Sir Willoughby, Stock Hustler. Oh yeah, before I get out of here, next week I am opening up NexGen Traders Community, School Community for free. I just think everybody need to get this information. I have too much information. I love the game. I love to trade. I love to invest. I just love the information. So I'm going to give it to you guys for free. So please, please subscribe, like, hit the notification bell. Tune in on the YouTube channel because I'm going to be doing more of my teaching and my lessons on the YouTube channel, and I will be uploading some courses from NexGen Traders on here. I will still have NexGen Traders live in the school community, but in order to get my plays, like my on-demand buys, my on-demand sales, my on-demand trades, you will have to pay a fee for that, but it's less than $15. You get what I'm saying, a month. So that shouldn't be nothing for you to make more money. So tune in, please, please tune in, because NexGen Traders is coming to YouTube, and we're gonna be learning a lot. You're gonna be teaching you how I trade, how I invest, how I analyze plays, each chart I look at before I get into play, the reason why I'm getting into play, and the news that's driving me to get in that play and to sell that play. So tap in. We're gonna be learning, man. We hustling. Let's go. Peace and love. Y'all have a great weekend.